The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Juliana Tafelbaum in London and Charlotte Reid outside the French National Assembly in Paris. These are your headlines. The Dow sees its worst day in almost a month as the US government shutdown continues into a 10th day, while Europe's Stoxx 600 looks to notch its longest week-to-week winning streak since August.
And the search is on for France's sixth prime minister in less than 2 years, as the office of President Macron say he will pick the new head of his government by the end of the day.
And Israel's cabinet ratifies a ceasefire deal with Hamas in a move which could see Israel's assault on Gaza suspended within 24 hours and Israeli hostages returned in the next few days.
Good morning, everyone, and happy Friday. I just wanted to start with a comment on markets and perhaps pick apart the first headline. We're talking about the Dow and the reversal that we saw stateside. How strenuous a reversal does anyone think we have? If you look at what the Dow has done over the course of the trading week, we are down by about 0.6 or 0.8%, rather, 0.5% yesterday in the trading session. So I think there's been a ton of euphoria in those US markets. Is it the US shutdown that is taking some of the peel off the table in the 24-hour window, or is it just some of the euphoria that we've seen in markets where investors are just taking a little bit of a pause, saying there's so much AI fever out there, we can't go up in a straight line, perhaps we need to think about our bets? And there's a big story that's in the FT this morning talking about the diversification of investor funds going into everything ex-US. And I think for me, one of the problems in the market this week has been the French story. The fact that France has reared itself up as an issue just as funds were starting to flow into other international markets. The DAX is still up in Germany. So you've got to pose the question, if the French market did not have issues on the ground politically, would the French market have carried the European markets forward this week as well?
You know, all of those interesting points, and I think we've been talking, we and investors have been very hyper focused on the AI trade. But yesterday, one of the most interesting developments in the market, to my mind, was Ferrari. This was a stock that plunged 15% yesterday after their capital markets day in Italy, revealed lower long-term targets and rolled back EV ambitions than the market had been anticipating. The stock absolutely plunged, and I think it's just a reminder as we head into earnings season that the focus of the market is likely to change, that the bottom up does matter, and some single stock stories that are totally AI unrelated could have a major impact on portfolios.
I think Ferrari is one of the most fascinating stocks on planet Earth. I will come to that later on. I know we've got to read on it later on, as I may as well. There is no sell-off. None whatsoever. Again, just disseminating what you said in the first headline as well. The Dow has its, what does it say? The Dow has its worst day. It's off 0.5%. It is, the S&P is a decimal away from its record level. The NASDAQ is a decimal away from its record level. The Dow is now a mighty 1.5% off its record level, having had the most enormous rally. It is 154% above its pandemic lows as well. There is no sell-off going on yet discernible across the market.
Absolutely, and that's the point. So where are the fund flows into Europe? And my point is that Europe does need to get its act together. And if that's on the ground in France at the moment, the international money, it's coming into the mix. I mean, it is being allocated right now. And countries are missing out if they're not proving that they are a great investment scenario. The money's gone to Japan and it's gone to South Korea in the trading session today.
Well, let's get to the market action. You can see on your screens, this is how the U.S. session shaped up yesterday. All three of the majors pulled back. The Dow off about 0.5%. The tech-heavy NASDAQ dropped ever so slightly, about 8 basis points. And the S&P 500 dropped about 0.33%. 10 out of 11 sectors were negative yesterday, led to the downside by materials, which pulled back about 1.5%, while consumer staples, a typically defensive part of the market, outperformed, rising about 0.6%. So clearly a bit of risk coming off the table, but just a little bit, I would say. say, in terms of characterizing the magnitude of the sell-off. Now, in terms of U.S. markets this week, let's take a look, take stock of how things have progressed. You can see on your screens there that the NASDAQ has outperformed this week, up about 1% coming into today's session. The Dow, meanwhile, has underperformed, down by about 0.9% week to date. As far as Asian markets are concerned, overnight we have seen a pullback in Japanese and Hong Kong markets. The Hang Seng down about 1.4%, the worst performer of the bunch. The Shanghai Composite down as well. Now, in terms of Europe and European futures, right now we are looking at a mixed, I would say muted start to trade on this Friday morning. Yesterday, the Stoxx 600 pulled back by about 0.4%. Let's take a look at how Europe has fared over the week in comparison to the United States. We're looking at the Stoxx 600 up about 0.15% this week, on pace for its third positive week in a row, but very modest gains when you look at the magnitude there. Now, as for Wall Street, what's in store for today's market open? You are looking at green across the board. The tech-heavy NASDAQ looking to add about 60 points. The Dow Jones looking to add about 90 points. So a modestly positive start indicated at this stage. Now, all of this as the U.S. remains deadlocked over how to reopen the government after a House-passed Republican bill failed to advance through the Senate for a seventh time Thursday, with no lawmakers changing their votes from when the bills were last considered. The shutdown now enters its 10th day, with senators adjourning until Tuesday next week. President Trump emphasized the damage is worsening with time and said any permanent cuts would be exclusively to Democrat programs.
Despite all of the damage that it's caused, the shutdown has been, pretty damaging. I mean, it's not yet because it's early, but it gets a little bit worse as it goes along. And we'll be making cuts that will be permanent. And we're only going to cut Democrat programs, I hate to tell you. We'll be cutting some very popular Democrat programs that aren't popular with Republicans, frankly, because that's the way it works. They wanted to do this, so we'll give them a little taste of their own medicine.
The U.S.'s September CPI report will be released despite the ongoing government shutdown, according to multiple reports citing U.S. government officials, saying the Bureau of Labor Statistics is calling back a limited number of workers to prepare the inflation data for publication. Now, it's unclear whether the report will be released on its scheduled date of October 15th, but it is expected before the Fed's next meeting at the end of the month. Peter Schaffrick joins us now, global macro strategist at RBC Capital Markets. Peter, a very good morning to you. We were just discussing on the program European versus U.S. Market performance. In your view, what is driving the European market at this stage? Is it taking its cue from the U.S. and factors there, or are European themes actually dominating the trade in Europe?
It's a very interesting question. When you look at like fixed income markets, for instance, we've basically been going sideways with the exception of France. And what has really happened is that the fixed income market was by and large a US story, or particularly a story about the US front end. The expectation the Fed would be cutting against labor market weakness, influence on the Fed, and all of these kind of things. But the European markets have not really followed where the US was leading. And I think that might actually be reversing at this stage. But within Europe, there's very little that has been really driving like the broader themes. It has been stories like France that were sort of on the side of the big show.
And in terms of France, is it at this point seen as a largely French story? Is it contained to the French market? Or are strategists extrapolating to broader Europe, and it has become a deterrent to investing in the broader region?
I think it's probably on that scale, yes, because at the end of the day, you need big markets to invest big money. But when you look at the pricing in the market, it's predominantly a French story and it's contained there. Again, if I go back to the fixed income market, for instance, what you have seen is you've seen a pretty idiosyncratic move in, let's say, French OATs, or specifically French OATs, relative to other sovereigns, but also relative to, let's say, French corporates. But what we haven't seen, for instance, and I think you mentioned it earlier, is European equity markets, for instance, particularly the bigger ones, they still have performed. So it's not necessarily that this is completely taking away from the investability, but specifically makes it hard to invest in France at the moment.
Yeah, Peter, I don't know what you were doing in 1992, but I bet it wasn't what I was doing. And that was, I was looking at various bond option markets, and I saw how the ERM crisis went from one market centre to the next market centre, from one currency to the next as well. And there was no insulation as well. I'm seeing a bit of a follow through from the OATs into the gilt market already. So other vulnerable countries potentially will be targeted if this gets bigger, won't they?
Well, but I think it's a very, very interesting point you're raising. And again, having lived, for instance, in the European case through the European debt crisis and the big contagion we've seen there, and that's actually not happening at the moment. What we do have, in fact, and you just mentioned gilts, for instance, we do have some countries that have very, very similar issues. And the UK and France are quite often related to that. And as a consequence, what you're seeing those markets where these issues are occurring, they are being challenged. But what we haven't seen, for instance, is that, let's say, the OAT story is feeding into BTPs or is feeding into Spanish government bonds. That's not happening at the moment.
What's the trade, Peter?
Well, we currently really, as going back to what I said earlier, we currently really like owning some European fixed income relative to the US in spread trades. That's definitely one of the things. We certainly think that the fixed income market is going to be challenged going into year end. So we want to be slightly short. And the steepener, the curve steepener is definitely one of the trades that is still out there. And we do have some sympathy for front-end longs in the UK, particularly sort of in early 2026. That looks quite attractive against the backdrop that eventually the bank might be able to cut.
Peter, good morning. Karen jumping in. Let me ask you about the currency, because we're seeing a lot of strength in euro dollar this year. But since the highs in September, it looks as though the currency is now rolled over to an extent. What pressures are alleviated by that move on the ECB?
Yeah, so I mean, certainly the ECB has commented very little on the euro, as they usually do. But there were some voices who had argued, particularly when we were sort of north of 118, who raised some concerns. But clearly with current levels below 116, I don't think that the ECB will really make a big deal out of this. So it really depends on whether or not we're strengthening back up, particularly north of 120. I think it could become a much bigger talking point. But, you know, as we heard this morning, for instance, from Nagel, it doesn't look like at these levels the ECB will be much concerned.
We hear a lot of messaging from central banks, one about being independent and not really paying an enormous amount of attention to other central banks. But the reality is what the Fed does matters for other central banks, making them look like they're tighter or looser in terms of their own policy. If the Fed does follow through with more rate cuts next year, what do you think that means for the ECB and where they stand on current rates?
Yeah, so I think you're right. Obviously, it matters what the Fed is doing, and for what it's worth, yeah, we also think that the Fed will continue to cut going into next year. And in my head, what that means is that the European central banks, or the ECB in particular, they will have a very hard time communicating anything else but that they're neutral or even have still a cutting bias. The market is still implying around about half a cut for the ECB. We don't think that will be followed through with. But what is going to be difficult, even if the economy stays decent and probably above trend as we expect, that the market will be able to price anything but a very, very long flat line. So any kind of hike talks is probably going to be a bit premature, even though the economy is probably going to look okay.
Peter, thank you for joining us this morning, sharing your views. Peter Schaffrick, Global Macro Strategist, RBC Capital Markets. We'll hear from Fed Governor Christopher Waller later today. Don't miss that conversation at 12:30 London time. Well,
let's turn to France, where French President Emmanuel Macron will name a new prime minister today, after outgoing PM Sébastien Lecornu shocked spectators Monday, announcing his resignation after failing to find consensus over the country's ballooning deficit. Lecornu is the third French prime minister to leave his job in less than a year. Well, Charlotte has been following all the action on the ground in Paris and no doubt having plenty more conversations. Charlotte, just walk us through what we're likely to hear today and how people are feeling about the political chaos that's been unfolding.
Yes, we're all with our bingo cards trying to figure out who can be the next prime minister. As you were saying, the sixth prime minister in less than 2 years, someone who has to find compromises with different parties and, you know, succeed where some of its predecessors very recently failed, whether it was Bayrou or Barnier or Lecornu. You know, they've really struggled to find any sort of majority to work with in parliament. So we hear some different names that came to the surface in previous nominations as well. So some people talk about potential technocratic government, and names like Pierre Moscovici, who of course ex-European Commissioner and now head of the Audit Court in France, Villeroy de Galhau, the governor of the Banque de France. Other political names also floating around, like Bernard Cazeneuve, the socialist who was prime minister at some point and was in government as a minister for interior with Emmanuel Macron when he was himself minister. So some names going around. Well, we heard from Sébastien Lecornu on Wednesday evening when he spoke on television after holding the talks for 2 days with the different parties. He came with an interesting and surprising suggestion. He said whoever it is, they should be completely disconnected from the presidential ambitions from 2027. He had talked about and complained about the awakening of partisan appetite ahead of that all-important election in 18 months. And, you know, that was an interesting call there. But some say maybe he was actually pitching for himself. And that could be the big surprise. Apparently, he could be the front runner to be prime minister again. So that would be an interesting call, but you know, then he would have to form his team, and then the report said the team would have to look very different with potential names coming from civil society, etc., etc. So we have to wait and see. But what we know is that the Prime Minister has to tackle first and foremost the budget. We are on a very tight deadline for the budget to be passed by December 31st. Of course, there is no shutdown in France. They can extend that date by a little bit. There's still ways to collect taxes if need be, but we know that public finances is something that needs to be tackled. Controlling the deficit, bringing it back under 5% next year from 5.4%. You know, the debt that is reaching 115% of GDP. So all this is the all-important conversation. All the past few prime ministers have been toppled on the question of the budget and the cuts that need to be made. So that is what needs to be happening now. So again, we have to wait and see who will be leading that government, and then over the next few days, who that team will be to do probably what is at the moment the toughest job in the country.
Yeah, but look, here's the problem, Charlotte, and you know this. There's many constituencies here, and they all disagree with them. So the French people and the French centre and centre-left may agree on one thing, but the markets are going to turn around and say, really? Is that the best you can do? You've already got Villeroy de Galhau today saying, well, it would be better if France's deficit did not exceed 4.8% in 2026. 4.8%, by the way, for all our viewers, is wildly higher than the amount agreed upon with the ECB and European Commission, but we'll ignore that for now. The chances of getting to 4.8% for 2026, if we do get a compromise between the left and the centre, they're very, very slim chances, aren't they?
It will be really tough, especially that the left said they're happy to come around the table if there's a reopening of the question of the pension reform, you know, whether it's a freeze of the pension reform or, you know, some adjustment of some sort. So the pension reform was passed a couple of years ago to bring the start of the retirement age from 62 to 64, and it has been gradually going up over the past few years. So there could be a freeze of that. So that, of course, that would have a cost. The argument on the other side is like, look, the political instability has a cost. People, you know, and companies are not investing or hiring. A lot of households are saving money rather than spending it. Foreign investors are worried and not investing money. So, you know, political instability has a cost. So some compromise has to be done in order to maybe potentially provide some political stability. And if the review of the pension reform is a cost to pay, maybe it's one worth taking at the moment, at least.
Charlotte, it's certainly been interesting to see that French assets have continued to stabilize despite all the uncertainty that remains that you just outlined. Thank you so much for bringing us the latest. Coming up on the show, Israel ratifies the first phase of a peace agreement with Hamas, but key sticking points remain. We'll have the latest details. Plus, we'll look at what's behind the rally as gold marks a record week, and we'll discuss the deadlock on Capitol Hill with former advisor to Nancy Pelosi, Michael Yaki, as the shutdown stretches into its 10th day.
Welcome back. Israel's government has voted to formally approve the first phase of a peace agreement with Hamas, paving the way for a ceasefire within the next 24 hours. Under the agreement, the remaining 48 Israeli hostages in Gaza, 20 of whom are believed to be alive, will be released, with Israel set to release around 2,000 Palestinian prisoners. Israeli troops will also begin a phased withdrawal to an agreed-upon line within the Gaza Strip. Hundreds of trucks carrying humanitarian aid will also be allowed to enter the enclave. The US is reportedly preparing to deploy 200 troops to Israel to assist with and monitor the agreement. US President Donald Trump said he hopes to travel to the Middle East this weekend. Uncertainties remain around later phases of Trump's peace proposal and whether they can be implemented, including the disarming of Hamas, which the group has not yet agreed to.
You sort of know what phase 2 is, but there will be disarming, there will be pullbacks, there will be a lot of things that are happening. I think it'll take place, and I think you're going to end up with peace in the Middle East. But we have to get our hostages back, and we weren't going to do it at the end, we're going to do it at the beginning.
We welcome to the show Dr. Sanam Vakil, who is Director of the Middle East and North Africa Programme at Chatham House. Dr. Vakil, you have been a consistent commentator for this channel and others throughout this crisis. Do you believe the ingredients are finally in place for the end of this war?
Good morning, and thank you for having me. I think that what we have right now is a lot of momentum from the US president above all, but consensus from European leaders and Middle Eastern leaders that this war must come to an end. It's gone on for far too long. And that pressure and momentum right now is getting us to the first stage that will see hostages released, bodies returned to their loved ones in Israel, and around 2,000 Palestinian prisoners also returned to their families. And that, along with the Israeli withdrawals from large parts of Gaza, but worthwhile mentioning, they will still be considerably in Gaza, will be important to build to the next phase. So, these are phases that require attention, dedication, and pressure above all.
Let me ask you about the role of President Trump here. We mentioned he is travelling to the region on Sunday, likely to attend a signing ceremony. We know it's been very difficult to seek resolution around the situation in the Middle East, but also in Ukraine. How much of a win would this be for the US president?
Well, I think he is claiming this as a victory. This was a campaign promise, so he is seeking to deliver on that promise. At the same time, though, he has exerted considerable pressure on Benjamin Netanyahu, something that his predecessor, President Biden, was unwilling or unable to do. This is what's novel here, and that sustained pressure is really going to be necessary on all parties, Hamas as well as Israel, to keep the negotiations going, to get us to phase 2, and ultimately to see an end that provides Israel with security and Palestinians with sovereignty and agency over their territory, hopefully with a Palestinian state at the end.
To what extent does President Trump deserve credit for this deal coming together? You just highlighted how he was willing to exert pressure that previous administrations were not willing to do. But does he deserve credit for actually making this ceasefire happen?
I think we do have to give him credit where credit is due. Yes, he does deserve credit, and he's going to the region, he's going to Israel and then to Egypt to celebrate the success of this moment. But again, I hope that he doesn't lose attention. There are many other conflicts that he's interested in resolving, including Ukraine and Russia, including the longstanding tensions with Iran. And this Israeli-Palestinian conflict, when left to fester, certainly rebuilds and resumes the same dynamics. We do not want to see the war restart in Gaza, and that's what many are worried about. And it's worthwhile also mentioning that annexation of the West Bank that was discussed just a few weeks ago has also been tabled and is not being discussed. The aim of the president, I think, ultimately was to secure the hostage release, but to also prevent the displacement of Palestinians from Gaza and the West Bank. And that is something to also applaud him for.
Dr. Vakil, we've talked previously about the role of Iran in creating this crisis as well. And I know you and I have had some kind of strong conversations about this as well. But does this augur anything more meaningfully on a bigger deal that actually brings Iran to the table and actually stops them of being such a terrible influence in so many parts of the Middle East?
Well, Iran is not currently part of this deal, but President Trump has intimated in his statements that he would like to see a broader deal. Certainly, the United States and Israel's campaign against Iran just in June that targeted Iran's nuclear facilities, alongside Israel's campaign against Iran-backed groups in the region, have contained Iran's influence. But of course, it hasn't eradicated Iran's influence. So I think here momentum is also needed to engage with Iran and to create a deal with Iran that will bring down regional tensions and perhaps also address not just Iran's nuclear program and its regional activities, but the broader underlying tensions of the Middle East that are between Israel and Iran. And that de-escalation will be essential for broader regional stability.
We are going to hear a lot about the Nobel Peace Prize recipient later on today, and there's already debate raging as to whether President Trump should be on that list of candidates. What do you think as we talk about one of the hot conflicts here that may have a resolution in sight? Russia reportedly saying they would back the US president for that Nobel Peace Prize. Do you think he's a deserving recipient this year?
I think Trump has certainly been nominated, although, as I understand it, the ballots for nominations closed in January. But it's important that Trump, should he win the Nobel Prize, win it for really securing an end to a conflict. He has been instrumental in a number of negotiations, instrumental, of course, in obtaining this first phase of a ceasefire in order to, I think, really merit a Nobel Peace Prize. I would like him to see this conflict through, if not broader conflict resolution across the Middle East.